Yeah, I think that this is an important like signal that Yellen was sending, even though it was just her confirmation hearings. She knew that the whole world was listening. And here's what I would say that she basically indicated, like what's the subtext. For the last 4 years, the US president and sometimes the Treasury Secretary has talked the dollar down. This violates the spirit, if not the letter, of the G7 and G20 agreement on currencies, that the markets are where they should be determined. I sort of think of it as like an arms control agreement. We could blow each other up by having beggar thy neighbor currency devaluations to gain competitive advantage. But let's agree not to do that. And that's what I think the G7 and the G20 have done. And so what Yellen was saying was that with the election of Biden and with her, if her nomination's confirmed, she will help bring the U.S. back into the fold, make it consistent again with the G7 and the G20. And so it's not that there's not a preference for the dollar. It's just that that's not going to be the goal of policy. Typically, what a central bank wants is the currency to move in the same direction as policy. So if the central bank is cutting rates, they want to have a weaker currency. Otherwise, the currency would undermine the effectiveness of their policy. So I think that the whole, I'd say if you want to focus on it, I'd say that the key to it is the intent. The U.S. will not purposely drive the dollar down to get competitive advantage. And Yellen was very clear that it won't accept other countries doing it either. I think because it's not just the United States right now, but Europe, Japan, and other countries see the cyber currencies and want to take a closer look at them. Partly because here's what we know: the biggest of these is the Bitcoin, like you say, and most of the Bitcoin. So there's a limited supply, and most of the Bitcoins don't trade. You know, in the stock market, we talk about a float. What's the float? How many shares of a company are trading? And if large institutions have them, like the family-owned business, and they keep them off the market, that changes the effective float. Same thing with these Bitcoins in particular. There's a lot of there's say $650 billion of Bitcoin value out there. But the individual Bitcoins very rarely trade. The bulk of them are held. In fact, in the internet, there's like an expression they use, right? HODL. For those people who are like long-term holders, they just want to hold on to them. They're not using them for transactions. So when I went back and listened and read what Yellen was saying yesterday, she was not talking about all of cyber currencies. She was talking about what are they being used for in transactions. And she's talking about here about buying other things. And she's talking about, and here's the issue really, I think too, that sovereigns, that governments have to come to grips with, and people who really like the cryptocurrencies have to also like figure out, get their heads around. And that is one of the big emphases since at least 9/11 has been really chasing down terrorist financing, trying to end it. And what if they've done such a good job with dollars and yen and RMB and euros and Mexican pesos that the illegal activity finds a loophole in the cyber currencies as a quick, efficient way to transfer money and liquidity, to clean their money. And so I think it's a rightful area for governments to look at. Are some people who are trading these for goods and services, or laundering, the illegal activity happening. And I would sort of suspect that the former Federal Reserve chair, and the Treasury Secretary has a greater access to information about what these cyber currencies are really being used for transactions than I do. I just saw the numbers of how much is really being traded. And out of that 650 billion, or however many coins there are, over half of them have not traded for more than 2 years. So that also explains to us the real rapid increase in prices is because there's a very small supply and a little bit of money can drive it. And that's why we like the capital markets like the dollar or say U.S. Treasury bonds, because they're so broad and liquid that you have to trade huge size to affect the price. But it appears that in the cyber currency space, you don't need that because of how small the float the effective float really is. Different markets, I suppose, but I think that in general, I think one recurring theme when I talk to investors and I see what's going on is this reflation idea, and that is that the governments, central banks, are going to take more action to help lift the economy, and of course, so the evolution of the virus and the vaccine are important, but people are optimistic that somewhere around the middle of the year or Q3, things could begin returning to normal. And that'll mean a stronger economy with low interest rates and a lot of this fiscal stimulus, a lot of this pent up demand. You've seen some of these numbers about how savings rates have gone up, not intentionally, but it's just that people don't have a place to spend that money. There's been President Biden likely to sign these today as executive orders to further extend the not having to service student loans and evictions and foreclosures also have get postponed again, and so people hopefully have a little bit more savings. But this is inadvertently, unintended, and I think that so generally speaking, I think that we should be looking at what the market's looking at. What I think keeps the values up is this reflation idea, and in a reflationary environment, I'd say that the dollar might not be the best horse to be on. It'd be the fastest horse. It looks like those currencies that are levered to growth, like the dollar block, Australia, Canada, New Zealand, some of the emerging markets, like the Mexican peso, where Mexico has over 4% 3-month T-bill, that annualized rate, and they've had a strong currency for the last 6 months. So I think people are looking at those kind of things. South Africa is very strong right now too. So emerging markets might be a levered way to play the reflation trade.